Hello and welcome guys to your very own channel Dr. Finance Wala. This is the first video on this channel where we are out to learn from each other, where I will be sharing my experiences as well as I will be learning from your experiences, so that in a long run we can create a channel and a group of fundamentally strong investors which will help us in earning money in the future and help in financially securing ourselves. So cutting all this boring talks, let's dive straight into the video. Disclaimer, this is no buy or sell recommendation, and please do your own research before investing. Well, guys, it's very clear that we are in the midst of a geopolitical crisis, and the news is all around that Iran has recently attacked Israel with drones and missiles flying all over. So now we will look at Nifty, and we have seen that in the last day, that is the last trading day, which was on Friday, Nifty, which was touching the all-time high at around 22,700, 22,720, it started to tank down and has reached around 22,515, 510. So 22,500 seemed to be a good support for the last day. But in this geopolitical crisis, where we have seen that Iran is currently in full-out attack on Israel, and also many international players, including India, are greatly concerned about this situation. So the next support level for Nifty is around 22,500, which is the present support level. And I think that this support level will be broken and Nifty will be testing around 22,300 or 22,200, any sort of that level. But is it a great thing to worry for this moment? Like we should sell all our stocks and we should leave the market? I don't think so, because let's dive into the past. So we can see that the Russia-Ukraine invasion. So the Russian war started around 24th of February 2022. It seems like just yesterday, but if we check the Nifty level at that particular time, so that is around February of 2022. If we check it there, then we will see that around February of 2022. So it comes here. So see guys, during this January and February of 2022, the stock market nearly fell around 7%. So it's not showing much here. So it fell more than 10%, I guess. It fell around 7, 8 or 10% during that particular point of time. But after the war and the news gradually began to slow down, then the markets bounced back again. It bounced back around 9 to 10% within a few months, that is 1 or 2 months. Then again, the next important war or the geopolitical scenario which was present was the Israel and the Palestine war. So if I check the war starting date, it was around October 7, 2023. Now again, diving back to Nifty, if we check around this same time, see October 16, October 17, it was at around 19,811 level, and it tanked down around 4 and 5% at that particular point of time. But was it a great thing to worry? Many people sold their stocks. Many people started to worry about the markets may crash. The market will be complete bloodbath will be there. But again, the Nifty from that particular low of 18,800 has currently bounced back by nearly 20% to this moment. That is from around 18,800 to around 22,700 level it has reached. And that is roughly from October to February and March. That is in just 6 to 7 months it has reached. So, what will be the effect? The first and the foremost thing which has caught everyone's attention right now is gold. So gold, 24 karat gold is currently at around 74,000, which is at a significantly high value if we see today. And in every Indian home, the people, especially the ladies, are quite worried today that the gold is touching so high levels. But now, if we start to correlate this, so first is that's October 7th, Israel-Palestine war, and I showed you here that the Nifty 50 crashed down around 5% or 8%. But at that point of time, it is very fundamentally clear, and anyone who follows the market will know that at that point of time, you can check it here, that it was before that the gold prices were falling. Till October, the first week of October, the gold prices were falling. Starting from September, they fell down by nearly 5%. But after the news of the war came down, and it is evident historically that whenever there is great tension in the market geopolitically, in the international, be it US market, European market, or Indian market, the gold has risen significantly when the markets start to fall. And here is a very good example that from October 4th till October 26, 27, October 90, gold prices shot up by nearly 10%. So guys, it's not even a month that the gold prices were up by 10%. Now again, the second scenario will be the Russia and Ukraine war. So the Russia-Ukraine war, which started around February of 2022, when we checked that the markets were nearly down by 7 to 8 percentage. At around this time, the markets were down around 11 to 12 percentage. But gold at that particular point of time, if we check, is here. So gold, which was around 49,000, shot up immediately by around the same 10 to 11 percentage within a few span of 30 to 31 days. That is a month. In a month from 5th of February to 5th of March, it shot up by nearly 10%. So the first thing which is very clear is that in this present situation of Iran and Israel attack and or war, as you said, the gold prices are very likely to go up significantly, which is presently at around 74,000. So the gold will definitely shot up. So if you want to invest a small amount of money in this gold, be it digital gold, be it physical gold, then I think it is a good time and there will be good return in the near future. Now, diving back to the markets. So we have seen that in the 1 year time frame, while Nifty was hovering around this 21,000 to 22,000 level for a very long time, that is for the last 5 to 6 months, it has gone up to 22,700. That is an all-time high of 22,775. And in the last trading day, it came down, but this is not any significant fall. So in this Iran and Israel attack, which I think will continue for some day, the Nifty is likely to fall, which was evident as I have shown you already in the Russia-Ukraine war and also in the Israel and Palestine war in October 23 and in February 2022 during the Russia-Ukraine war time. So how much will the Nifty fall? Well, I think that no one can guess it, but presently the levels are around 22,200 to 22,300. 22,300 to 350 will be a very strong support zone, and if it falls below that, then it can come somewhere around 22,000 to 22,100. But is it a very significant reason to worry about this? Well, I don't think so. It will be a very good opportunity rather to invest in fundamentally strong stocks. So if you are completely new to this market scenario, or if you are confused regarding where to invest, then the very good option right now is to invest in index funds. The index fund, be it Nifty 50 or Nifty Next 50 or the Sensex fund, they will be very good. They will provide you a very safe return, which they have historically done so with an annual return of 10 to 15%, which is a very good return for me. Now, here talking about specific stocks, there are many stocks, and today I will show you one of it, which is HG Infra Engineering Limited. So this is a small cap stock, and as the name suggests, infra engineering, so it is basically in the infrastructure sector. Now, a few good points about this company is that the company has a very strong client base, and by strong client base, here is an evident fact that the government sector itself is 92% of the company's order book, and the private sector is around 8%. And even in that particular private sector, most of it are by the EPC model. That is, the private sector companies have given this work to HG Infrastructure Engineering, and majority of that work is of the government sector, which those private companies have taken, like the Adani Road Transport Project, the Tata projects, the IRB infrastructure, and so on. So here you can see that the order book currently is 70% from the government, and the private sector is around 30%. And as of the first quarter of 2024 financial year, the company has an order book of 10,700 crore. The company has a market cap of around just below 7,000 crore, and it has an order book of 10,000 crore, which is a very good thing for the investors. Now, the company is growing its presence in around 11 states, which include Rajasthan, Uttar Pradesh, Odisha, Jharkhand, and different other states. So, what does the company actually do? The company is involved in the infrastructure business. The important highlighted projects includes, we can check here that it's the Kanpur Central Railway, the NTPC Shimadri, and it has also completed projects like the Narnaul Bypass, the Gurgaon Sona Road, Rewari Ateli Mandi Road, and there are several such projects which belong basically to the government sector. And with the present scenario, there is a very high likelihood that the current dispensation, that is the current BJP government, is very likely to win in the upcoming elections. And its main focus is on the infrastructure development of the country. And in such case, a company like this will be very beneficial. Now, checking the fundamentals of this company, the company is currently at a price level of 1,057. It has touched the all-time high of 1,124. The company has a very good ROCE, that is 25.4, and ROE, that is just below 30%. The RSI level currently is 65, which is below 70 and above 30. So it is neither overbought nor oversold. Now, if we check the pros of the company, then it has delivered very good profit growth of 42% CAGR over the last 5 years. And as I have said, that it has very good ROE and ROCE. Now, now, if we check the sales of the company on a quarterly basis, which I don't think is relevant for a infrastructure company, so here is a year-on-year sale, which brings the real picture. You can check, guys, that in March 2016, the sales of the company was around 741 crore, Within a span of 2 years, the company has doubled its sale to 1400 crore. From 2018, that is around 1400 crore, the company nearly doubled its sale in the next 3 years to 2600 crore. And in the next 3 years, that is in the current year, it is around 5206 crore. So continuously, the sales of the company has been rising. But more importantly, the company's profits have also been equally rising over the last 5 to 6 years, and has shown a very strong growth in its operating profit as well as the net profit after the taxation. The operating profit margin has also grown from 11% to 20% over the last 5 to 6 years, which is a very healthy sign. And this is what I called a fundamentally strong company, which good with good fundamentals. That is a stock PE of 13.6, which is even less than the industry PE. And it is very interesting to note that the stock PE of this company is much less in comparison to many big players, be it IRB Infrastructure or Rail Vikas Nigam Limited or Ircon International, which are all infrastructure companies. So this is a very good stock. Now let us check the shareholding pattern. The promoters have maintained their healthy 74.5 percentage stake in the company and have not diluted any stake. The FIIs have increased from around 0.12 percentage in the March 2021 quarter, and presently they are at around 1.56 percentage. Though this is not very significant, but the FIIs have increased their stake, which shows that the FIIs are seeing something good in this company. On the same time, the DIIs have diluted some of their stakes, but they still maintain a very high stake of around 12.45 percentage, and the public shareholding is 11 percentage, which is not very high when we compare it with other countries. So guys, please comment if you like this video. Now let us check the stock HG Infra and its price levels. Even a few days back, I put up this stock on my channel shorts for basic research and study purpose. You can check in the link in the description. So you can clearly see that HG Infra was fluctuating from the last 1 year in this zone, that is between 900 to between 850 to 900 and 940 zone. But suddenly in the last few days, it has shot up by 17 percentage in a span of around 2 to 3 days. But still, I think that this run up is not very high, and the stock is still at very good levels to buy, which is evident from the current PE ratio of 13.6. The book value is 331, so the price to book ratio is 3.19, which in the present market I feel is not very high. The company provides dividend of 0.12 percentage, which is not high, and the Petrovsky score is 3, which are some reasons for concern. But the debt to equity ratio of the company is 0.67, so the chances of failure of the company is very less for me. And also, one of the important factors, as I have told you, is that the company has nearly 70% of its order book from the government, and the company presently has done 92% of the order book completion from the government sector alone, and the government is not likely to default on any of these payments, and the government will ensure that the projects are completed in time. So such a company is very likely to benefit. Please comment on what you think, and we will meet in the next video. Please share and subscribe.